All right, folks, welcome back and thank you for tuning into your daily silver news. My name is Silver Slayer, and we are back with the man, the myth, the legendary Andy Schectman, which is the CEO of Miles Franklin. It's going to be a great episode. We have so much to catch up on, and I have some things I want to personally ask Andy. So yeah, make sure you stick through because so much has happened. I feel like this is just going to be a jam-packed episode. Andy, what's up, man? How you doing?
Hey, brother. It's great to see you with a smile on your face. Great to see you again. Been too long, and I'm looking forward
Yeah.
to doing these with you again. I'm good, brother. I'm very good, and crazy times. You know, that is a Chinese curse. Interesting times, rather. May you live in interesting times. And these ain't anything but interesting, that's for sure. So let's get into it, and good to see you again, man.
Yeah, I do want to say you always say this, and this is probably the most important sentence that I've ever heard that has to do with investing. You say price is the greatest tool of misdirection. And like right now, silver's at like $69 when it was just like 121 in January. And I see more people hesitant to buy when prices are low like this compared to when they're 121, everyone's rushing towards it. I always find that so fascinating. Like we were texting the other day, and I was like, the psychology of investing will always baffle me, like intrigue me.
Yeah,
But
well,
what do you think about prices?
that's why there's so few people that succeed in investing, Jay. It's that you know, there's a whole school of theory, as we've talked about before, investment theory, wave theory, Kondraty of an Elliott wave, which measure the cumulative emotions of the herd, and from greed and euphoria and FOMO to oh no, concern, frightened, scared, panic, and it's this wave pattern of emotions that people aren't able to distance themselves from that very frequently. That's why so few people are able to buy when things are on sale, because it's not it hasn't been validated by the herd.
Yes.
And so, to step outside the herd and to say things like you have, like I have, when it wasn't conventionally popular or wise, is what makes things very different. And when you take a look at prices now, look, gold and silver are supposed to do really well, right? When you're in a war period, for sure,
Right.
gold. But it's safest when you treat it as money. And I've often said that on your show. I've said you don't buy gold and silver to become wealthy. You buy it because it is wealth.
As well.
And it is the classic form of money in the respect that it retains value, as the dollars that we hold as money, which are actually its currency, has the lasting power of a melting ice cube. And you can pick any asset you want measured against ounces of gold over the last 50 years, and you'll see that to be true. But what happens here is that speculators piled in, and they use leverage, and they push the price too far. And then when the markets go risk off, like we saw, for whatever reason, we don't have to get into the reasons just yet, but when the markets go risk off, they sell their gold for dollars, and they call that safety. It's not safety. It's, in essence, what it is. People got too levered up and had to unlever and move to dollars.
Yeah.
At the same time, you have the quarter end here, where the paper market gains that we've seen for years allow the banks and the commercial shorts, as we get near option expiry, to let all of those options that they have sold expire worthless, and you get that price weakness that is not technical. It's excuse me, that is not fundamental, but it's technical. And the fundamental story for buying metals hasn't changed. Nothing bearish has changed. War is escalating. You got debt exploding, $1 billion a day virtually in this war. You got physical demand still real, as we'll get into the offtake on Comex. You got India moving forward with local pricing for their ETFs and silver. They don't want to
Next
use the
week.
benchmark. Yep. You
Yep.
got China pushing for alternative price mechanisms. They're settling currency imbalances in gold, and they're trading over local networks or their SIP system or their Enbridge system and settling imbalances in gold. You got Comex inventories falling. I mean, that's the real story. The paper market, Jay, may set the price today, but I don't know, man. Physical demand will determine the truth tomorrow, I guess is how I would say it.
If everyone in the world tried to buy just 1 ounce of silver, there wouldn't be enough to go around. And as the dollar keeps losing purchasing power, more people are rushing towards precious metals. Supply is tightening, inventory is crumbling, and premiums are rising. You don't want to rely on websites that are constantly out of stock. You need a direct source. And that is exactly what I can offer you. I'm connected with Andy Schectman, which is the CEO of Miles Franklin, one of the most respected precious metals dealers in the United States. Having a direct line like this is something most people don't get. So if you're serious about silver stacking, send an email to info@milesfranklin.com. Let them know Slayer sent you. You're directly plugged into a precious metals dealer, because soon enough, most people won't be able to get their hands on silver, and I don't want that to be you. So once again, send an email to info@milesfranklin.com. Let them know Slayer sent you.
You talk about silver, the BIS came out recently and said the worst silver sell-off in history was accelerated by the growing footprint of retail investors in leverage exchange-traded funds and margin increases, which is very true. In other words, this is not a fundamental change. This is a structural change where, in other words, the fundamentals are still the same, but you had all this levered interest into ETFs in January that had to rebalance. Some of these ETFs rebalance every day, and so you had the ETFs rebalancing at the same time. You had margins going through the roof, went up 300% from December to the end of January, which flushed everybody out. At the beginning of December, I needed roughly $15,000 in a margin account to hedge 5,000 ounces of silver. Now, as someone who's hedging an inventory, that gets expensive when the price goes up to over $50,000 in January for that same 5,000 ounce hedge on 2 million ounces of silver in the warehouse. If you're a speculator and you're buying contracts, watching the price go higher and higher and higher, in December and January, you think you're a rock star. And let's say you have, at that time in early December, you had 110,000 in a margin account. It's just collateral sitting in an account Comex uses as collateral. That would allow you to control 7 contracts at $15,000 each. 15 times 7 is what, 105? So you could control, at the time, silver was $60, 5 contracts, 30,000 ounces at $60, right? That would be what, 7 contracts at 5,000 ounces apiece. So you're talking roughly, I don't know, each contract would allow you to control $300,000. So times $2.1 million. Sorry. It's Monday morning. I haven't had enough coffee yet.
Yes.
So over, you got plenty of silver you're controlling over, a huge amount, $2 million worth by having 105,000 in your margin account. A month later, through the margin increases, not to mention the price of silver going straight up, you think you're a rock star, but then all of a sudden you have a 300% increase. Instead of 110, you need over $330,000 to keep in a margin account to hedge that same amount. So you're getting margin called if you're not posting that extra collateral just like that. And the selling beget selling, beget selling, beget selling. You have the ETFs that were rebalancing and all of this leverage. You got the BIS coming out and saying this, the Bank of International Settlements. They're the most powerful bank in the world. Now, for most people, that would go right over their head. I looked at it as them taking the West out to the woodshed, so to speak, punishing them or saying, what the hell are you guys doing? Because not only did it collapse the price, but it also destroyed this industry of refining. And the refiners got all messed up. And they're still months back ordered because of it. Because if you're a refiner, which provides a tremendous amount of liquidity to the industry, and you take in $50 million worth of silver from the public in various forms, from flatware to doré, you have to hedge that same amount. So, which means you got your metal that you're working, you're breaking it down to turn it into shot to make it into bars and rounds. That takes time. And then you hedge the same amount on Comex. You go short, so you're market neutral, right? Well, the price of silver kept going up so fast in December and January, just flying, that they were getting margin called in and of itself on their short position, which kept getting crushed. And add into it margin increases, and the refiners are like, we can't take any more business. We're going to go out of business. We're going to go
Yeah.
bankrupt. So they all shut down.
Yeah.
And the BIS came out and said this was not a fundamental crash. This was more structural in ETF rebalancing and margin increases. I found that to be kind of interesting. And at the same time, we've seen the big commercial banks cover a lot of their contracts. The open interest is really very low in silver. And I mean, as low as it's been ever in gold or in silver, and almost as low ever in silver. And so, in other words, you're looking at the commercial banks having as low of a short position as they've ever had. So they're starting to go long. They're covering their shorts. They're not quite going long, but they're getting out of their short positions. And I think that's an interesting thing here is that, last night, as an example, I mean, if I had to guess, now I could be way wrong in saying this, but it seems to me last night might have been the final flush out, because I woke up in the middle of the night last night and gold was down almost $400, and silver was getting hammered. And as I look at it right now, before I jumped on this with you, things have turned around, and gold's about flat and silver's up $2.50 right now, or close to it. So I don't know. All I can tell you is that all of this shorting, to me, it's like the bullion establishment is scrambling to close its shorts and go long. And that's how you would do it. You would knock it down just like they've done and cover the shorts. And the Economic Times mentioned this a few weeks ago, saying that they're going net long. Now, net long doesn't mean long. It means they could be 12 long and 11 short. But they are moving away from these massive short positions, exposing the big banks in Europe and Canada. So, look, the bottom line is this, man. Silver and gold coming down in price changes nothing. It's the same game it's always been. The paper market pushes the price around. But right now, what you see is strong hands accumulating the real metal. And to me, lower prices are not weakness. They're an opportunity. This is accumulation. This is positioning. And remember, there's a buyer for every seller. And the buyers of this panic are the smart money traders, Jay. They're not the emotional traders, as you mentioned, about, it's just they're emotional and they're selling.
Yep.
And the people that know the fundamentals haven't changed at all. They're the ones standing for delivery and getting ready, I think, for the next leg up. So you look at the Chinese as an example. Their customs data shows that they imported 790 tons of silver in the first 2 months of this year. February alone was 470 tons. That's the highest monthly import volume of silver ever recorded, as the price is getting destroyed.
Yeah.
So while silver keeps heading down, China is vacuuming up physical metal at every available, literally at every available turn-in off of every available shelf on the planet at a pace never seen before. So yeah, I think that this is just one of these deals where you got to have strong fingertips and shut off your screen if it affects you that much.
Yeah. The validation and confirmation, I think, is really where this all is coming from. Like when the price is high, people have that confirmation, like, oh, it can go higher. And when it's down, you get a little hesitant. Nobody's talking about it. It's not on the news. And then it's a little iffy. But if you understand silver's true value, then you don't look at it in dollar amounts anyways. And right now, specifically right now, I guarantee someday people will be wishing they could go back to March 23rd and pay, 70 something dollars for an ounce. They'll be wishing that. But it's harder to see that in real time.
Well, I think it is, but look at what the big money is doing, right? A lot of
Exactly.
people will say that, well, the registered inventory is still as high or higher as it's been for a long time if you go back in time. True, but during COVID, we saw a massive flood of metal go into Comex, right? So if you go back to last year, September 2025, you had 200 million ounces in the registered category. Now you have 78 or 79 million. Roughly 120 million ounces were drawn out in the last 6 months. And I think that's something to ponder, to think about. And, you look at, for example, the February delivery. February is not a major delivery month for silver. And yet, for the past 16 months, we've seen anywhere between 30 and 70 million ounces every month delivered onto Comex. That doesn't mean leaving Comex. It means delivered onto Comex. And we'll talk about the difference in a moment. But in February, 25 or 6 million ounces were delivered, one of the lowest delivery months in the last 16 months, yet 38 and a half, almost 39 million ounces left Comex. In other words, 160% of what deliveries could explain alone left. Now, I say this, I've said this a lot last week, if a mint box of Silver Eagles weighs 42 pounds, who's taking possession of almost 39 million ounces? And it's an interesting theory. Now, here's another interesting one. I'm not saying there's any correlation, but I mean, kind of feel like there's a correlation. If you look at the ETFs, which is really kind of interesting. I gotta find the number here. So, gosh, I hope I can find it. We've seen, that's gold. I gotta find the silver ETFs because it blew me away, the correlation. Here it was, okay. Okay, so, people talk about metal leaving the ETFs, right? I've always thought it differently. So when you look at gold as an example, in gold we've seen roughly 30 tons leave the ETF, GLD ETF, and it's the third consecutive weekly decline. And so I think over the last 3 weeks, over 60 tons have left GLD, right? So when they say left, that could be people selling their shares, sure. But it also means that the primary authorized participants, like the commercial banks, are able to accumulate shares and stand for delivery themselves, pull the metal off quietly so it doesn't expose the frailty of the registered category on Comex, and it's much more difficult to ascertain who's doing this, right? I'll give you an example of what I mean in silver. So in silver, which is kind of crazy, we saw a week ago, a couple weeks ago, I don't know exactly the time frame, but ETFs have been dumping shares and releasing silver back into the market. The holdings of SLV are down 38 million ounces, right? So 38 million ounces left SLV. But do you remember what I said about the February metal that
They're
left
slow.
Comex? So 38 million ounces left Comex. They loaded out in the month of February. Could there be a little bit of I don't know, could it be coincidence that 38 million ounces left SLV? As 38 million ounces, where did it go? Did it go back into the registered category? Or did it go back into the eligible category? Or was it delivered? Where did that, is there something that we should be looking at where the same amount of metal left SLV as left Comex? Could 38 million ounces gone to the bank that released it out of the registered category? All I'm saying is that there are games that are being played right now, and these games that are being played, as far as I'm concerned, signal desperation. Silver leaving Comex does not automatically mean prices are going to explode right away.
Right.
But what it does tell you, it tells me, is that physical is worth a lot more. Now, you talk about games. Silver crashed 46.5%. And according to the March 20th Commitment to Traders report, and of course, right at the bottom, JP Morgan closes 633 short contracts. Remember I said it appears that the banks in the United States are trying to go long or get out of these huge short problems. They closed 633 short contracts right at the bottom. And the March 20th COT report shows this. That's 3,165,000 ounces that they covered right at the bottom. So in March, there has been 12,532 gold and 8,713 silver contracts issued and stopped. So 12,532 times 100 ounces is what? 1.2 million ounces of gold have been delivered in March, and 8,713 contracts have been delivered. That doesn't mean left, but 8,713 times 5,000, 43,565,000 ounces have been delivered in March. And it's not done yet. The month is not over yet.
Wow.
So,
Wow.
I want people to understand that when you see these kinds of deliveries, which are extremely high, something's going on. And I don't know, I just think that the people at that level do not screw around and betrays the price, right? If the price is getting hammered so much, who the hell is taking delivery of almost 44 million ounces of silver? And that's the unusual thing, because most of my career, these contracts didn't stand for delivery. Meaning put the metal in my account, put it in my eligible account on Comex, and some of it leaves, as we saw in February, where 160% of what was delivered left, right? Way more than was delivered left. Why would it leave? Where's it going? Who's running logistics? Right. That's over 2 million pounds. So when you see all this silver and gold being delivered, that never happened before. Very small fraction of contracts stood for delivery. They would roll forward or cash settle. To me, stress is showing up not in price. It's showing up in visible vault drain, in the potential for delivery failure, which we're a long ways away from that maybe, but I don't know.
Did you hear about their cooling failures and all of these things?
Well, not only that, you had the cooling failure, which was on Thanksgiving night, right?
Yeah.
And of course, everyone is trading at 11 o'clock at night on Thanksgiving, right? And of the 1,000 commodities or so traded on Comex, just the metals servers overheated, and these server farms have double and triple redundancy for cooling. When that finally opened up 12 hours later, 11 o'clock the next day in the morning, the price got clobbered.
Yep.
Now, the same thing
twice.
happened a couple of weeks ago. But how about on the other side, in January, when the price collapsed? It was a glitch with the circuit breakers that didn't work. So you can have glitches to the downside and overheating and glitches to the upside. This reeks of desperation.
Yeah, that's
these things, fool me once, shame on you. Fool me 4 times, shame on who? And I just think that it's one of these deals where, it's becoming an issue. Just the other day, we saw, I think it would have been Friday, I was reading Ed Steer. He says 2 million ounces loaded out. Again, just the other day, 2 million ounces left Comex. And that's kind of, oh, by the way, it left the eligible category, not the registered category. That means private metal is leaving, not necessarily the deliverable pool, which is registered, being hit directly. This is coming out of eligible. And it tells you one thing clearly. Metal is moving out of the system, not into it. And so we've seen 102 million ounces in January and February combined left Comex, plus 26,716 million ounces so far in March. And we're well into the 6th year of a structural deficit. So where's all this metal going? I don't know. This is all coming
Yeah.
from Ed Steer, and look,
I mean,
it's hard to explain.
yeah.
It's hard to explain where it's all going, to be
Did
honest.
you hear JP Morgan's forecast for 2026 is like 81 bucks? And Bank of America's they were saying like 150 plus dollars. I think they even said as high
Bank
as
of
like
America said
309.
three
Yeah,
hundred and nine.
309.
Yep.
While
And
JP
that's
Morgan's was 81. Like
well, and
what
that's
the
coming from their lead metals trader as
Yeah,
well, or
that's
their lead
insane.
metals analyst.
Yeah.
You also have the lowest open interest in silver in over 15 years. Open interest means the contracts that could stand for delivery. It's in other words, the managed money is saying, screw this. I'm not going to play this rinse, wash, and repeat game and get battered by the commercials again. So what that really means to me doesn't guarantee that silver will go up tomorrow, but what it does tell you is that the market is getting much thinner. And thin markets are dangerous in one respect, that if real demand shows up in a thin silver market, price can move a hell of a lot faster than people think.
Yeah.
So I don't know. Yeah,
In
things
either
are getting
direction.
real interesting, and I think what we saw last night, I'm hoping was the final flush out. I guess we'll see, but certainly this
Yeah.
has been one that has wreaked havoc. Now again, you do have options expiry here pretty quick, so and quarter end options. So I would expect, by the end of the month we start to see things really turn around and move up. But I guess we'll have to see. I saw something really interesting. I'd like your comment on. Someone bought 11,000 December 2026 Comex gold bull spreads between $15,000 and $20,000. They're call spreads. Now that means that they don't make money unless the price of silver by the end of the year in December is between $15,000 and $20,000. They'll buy
Price
the
of
15
silver?
and sell no gold.
Gold.
They'll
I
buy
was
the
like, holy
15 and
shit.
sell the 20. But here's the thing. The spreads or these call spreads were purchased after the crash, not before it. And that's kind of the key point where retail was selling into the panic. A large player, some crazy large player, used the washout to build a 1.1 million ounce, what they call tail risk position. It's kind of a lottery ticket. But that's an expensive lottery ticket. Would have cost about $3 million. And the player is not really betting on gold in my mind as much as he's betting on, all of the
Something
craziness
bad.
and
Yeah, that's what,
monetary
yeah.
and geopolitical crap.
Yeah.
But here's the trade. The trade is simple. Huge upside, limited downside, but it doesn't pay out unless gold triples from here. And it's who's going to do that, right? Do they know something we don't
They
know? I'm
have
just
to.
saying that's public. Not you can go look at it. It's all for the
Did
public.
that
You Google it; it'll pop right up.
was that before or after the Iran?
After. Well, it started after the crash in January. So they started buying
So
it
it was
after the
before
price
the
collapsed.
Iran
Yes.
stuff. So he
Yes.
probably knew. I don't know. That's crazy. I don't know. So I like what you said though, how he's not betting on gold rising. He's more betting on the economy and everything kind of diminishing. And that's a good way to
Geopolitical
look at
stuff,
it.
yes.
That's what David Bateman, when he bought like that $1 billion worth of silver, he gave 9 reasons. And it really wasn't even so much about like precious metals. It was him betting against the dollar, which I thought, But I want to.
Yeah, go ahead.
I just want to go into Trump and a couple of things.
Yeah, let's do it.
I'm sure people are curious. So first, I'll throw this out there. For the 250th anniversary, some people are saying that he's going to make a $250 bill with his face on it.
Ah.
Have you heard about that, or
I
would
have
you
not, but it
support
wouldn't
that?
surprise me. It wouldn't
Yeah.
surprise me at all.
Yeah, that would be pretty. Honestly, that would be pretty great.
I mean,
A
I don't think that would
$250
surprise anybody.
Yeah, $250 bill. I mean, those would be convenient though, honestly.
Well,
But,
I mean,
yeah,
have you ever tried going to a coffee shop on a weekend with $100 bill? They look at you like they want to
Right.
shoot you. And I saw a report that you're not Gen Z, are you?
1992.
Is that Gen Z?
I don't know, honestly.
I don't know either. I don't know if that's
The-
X
don't
or
know.
Y or Z. I don't know,
think
but
I'm a-
I saw that 60+% of Gen Z calls cash cringe. whatever the hell that means. They don't want to
I,
hold cash, but I would love to have some $250 bills just
yeah,
for the hell of it.
that's yeah. People are so I don't know. Yeah, I feel like my daughter's era, like she's 5, like by the time she's like 16 and 17, as there will everything will be digital. Like honestly, like everything's gonna be. It already is, honestly, to most. You go to the store, swipe of a card, ATMs, even like with Bitcoin ATMs and
Or
QR
the
codes,
Genius
bro.
Act, man. The Genius Act goes into effect in January of next year, if not sooner.
What is
That's
that?
law. That's something you really ought to know, and that was just passed. It's a stablecoin bill, which basically says that as of early next year, you'll never write a check out or send a wire ever again. Money will move, anytime dollars move globally, will move via blockchain, backed by stablecoins that
See,
are backed by 90-day or less short-term treasuries, which gives synthetic demand for the treasury. So when people freak out about this new Fed chairman who is supposedly hawkish, and the Fed can only control the very front end of the curve, the overnight lending rate. So think about this. Whether you're buying a pack of cigarettes or a new house anywhere in the world, money will move instantly, like on Zelle or Venmo. You won't notice a difference other than how fast it moves when you look at your bank account, but the movement across a blockchain network will be backed by short-term treasuries, 90-day or less, pretty much exclusively. There will be some dollars involved, but mostly treasuries. That creates synthetic demand for the front end of the curve, which smashes interest rates low, which makes what the Federal Reserve does almost non-existent. They're going to neuter, that's the end the Fed kind of thing. What do you need the Fed to control the front end of the curve for when money is keeping it, money movement anywhere? If I owe you $100, it'll transfer like that, and there'll be a stable coin will move between us, and the Clarity Act says that the interest on the stable coin can't transfer to me or you, can't be transferred. The issuer holds it. So the issuer, in other words, companies like Tether, keep that interest. What's Tether been doing with all the money? They have the largest stockpile of gold in the world outside of central banks. They're buying gold with all the interest that they
I
get to
didn't know
keep.
that. That's
Yeah,
very interesting.
and that devalues the dollar, pushes gold up
Right.
higher, and would support Judy Shelton's idea of backing a treasury bond with gold. And I was a little disappointed. I was on a live stream with Adam Taggart the other day, right before Judy, and he asked her about it again because she's been prolific in talking about it. And she said, well, I can't tell you what the response was. I'm not allowed to say that, but I don't know if they're going to do it or not. That would be my opinion. She was much more open about it before. We'll see if Trump plans on backing the back end of the bond market with gold redemption and zero coupon bonds. But check out the Genius Act. It's law. And it basically says, come next year, no money will ever move via traditional measures like check and wire. Now, the negative side of that is you look at the push to get the digital ID for voter integrity.
Right.
You
Everything's
digital. You
everything's
have
on the public blockchain.
well, you have digital ID meshing with digital money, and everyone says, well, it's not a central bank digital currency, but it's private institutions issuing these stable coins. I had Catherine Austin Fitz on my show, and she said it's just as bad. It's a central bank digital currency in stablecoin clothing because all the everything moves in and out of the treasury. So the feds will control the inroad and the outroad. Meshed with digital ID, digital money, she believes it is the foray into the digital surveillance state. So another reason
Yeah.
to own gold and silver outside the
Yeah.
matrix, outside the
Everything
system.
on the blockchain. That's how JP Morgan got caught back in like 2017 buying millions of dollars in Bitcoin. Like Jamie Dimon came on TV and called Bitcoin a scam and it's horrible, shot the price down thousands of dollars because he was on I forget what news station. Right after that, who got caught buying millions of dollars in Bitcoin right afterwards was JP Morgan. But they got caught because every transaction on the blockchain is public. It's all public data. So
Well, and to that side, if you look at the stable coins, they have three things built into them already. And Catherine was most upset that the one thing that they didn't say in the Clarity Act is that that to take out the ability to make them programmable, to do things punitively if they think you're bad. But they already have three things built into them. They have AML, anti-money laundering. Where did you get your money? KYC, know your client. Who are
Yeah.
you? So they'd say, okay, Silver Slayer, and where'd you get your money? And KYT, know your transaction. What are you buying? Know your customer, know where they got the money, and know what they're buying. We are moving closer and closer and closer
Yeah.
into, and it's interesting, the CEO of USA Tether, which is already Genius Act compliant stablecoin, is Bo Hines, who was Trump's crypto czar through August. And I've always felt that this was a wink, wink, nod, nod, because you heard for a long time Tether was in trouble with the Justice Department, and they were getting what's it called, investigated. And now you got Bo Hines in there, and they have the largest stockpile of gold in the world. They're taking all of, next to central banks, they're taking all of the interest that they issue through treasuries, and they're one of the largest holders of treasuries in the world. So they're helping the government by suppressing interest rates, by buying treasuries, backing their stable coins, and now that interest is not transferable as per the Clarity Act. They're buying gold with it, which devalues the dollar, which pushes gold up higher, which would allow them a much easier path to paying off the debt and bringing back manufacturing, which is something that we need to do. Because, you look at Ray Dalio, he said 60% of this country has a literacy rate under the 6th grade. We're broke as hell, 38 trillion in debt plus 175 trillion off balance sheet in Medicare, Medicaid, Social Security. We don't make anything, so we got to bring back manufacturing, or our kids are in big trouble, because just in time to fix everything is AI, which blows up all of the entry-level jobs and even white-collar jobs like accounting, like radiology. All of these things AI can do like that at a fraction of the cost. You don't need to pay the labor component. So you get a K-shaped economy where the rich get richer, the poor get poorer, at the maximum efficiency with businesses at the expense of millions of jobs. You need to bring back manufacturing, or your daughter or your grandkids or my kids and their kids, what are they going to do in an environment where we make nothing? And if we are reliant on countries like China for everything from aspirin to aircraft parts,
To silver.
what are we going to do? Just everything. And so there is maybe method behind all of this madness. I'm just saying, if there is nobility in what he's trying to do and bring back manufacturing, Triffin's dilemma, which is the theory that if you're the reserve currency, you will never, ever, ever have a trade surplus, because the world needs more dollars than we can give them through trade alone. So these countries over time have to sell their currency to buy ours, weakens their currency, strengthens ours in relation to one another. And this is why over time you see manufacturing go to Cambodia and Vietnam, who just joined BRICS, and China, because it's so much cheaper. And that's what Triffin's dilemma says. So, by doing this and taking all the interest in buying gold, gold is the way you devalue a currency. It is the only neutral asset by which all other currencies can be measured. And so when you look at last year as an example, where the dollar index, which is a basket of crappy currencies that are a melting ice cube against the dollar, because they're all selling to buy dollars, devaluing their currencies to sell us stuff. That's not the way to measure the dollar. Measure it against gold, because in the dollar index it was down 10%. Against gold it's down 80%. When Roosevelt confiscated gold and then immediately devalued the dollar by 40%, he devalued the dollar against gold. And so if indeed they're buying gold with all the interest that they are accumulating and can't pass out to the holders of the coins, stable coins, well, gold goes higher, the dollar goes lower. And if we are able, which is half of my thesis, won't get into that now, but to bring back manufacturing, the first thing would have to happen is into a devalued dollar. And that's why you had that idiot Jared Bernstein, Biden's chief economic advisor, who tried to explain Treasury issuance on X. It was the most humiliating thing I've ever seen. Or even Vice President Vance on White House letterhead. They've both, Bernstein wrote a report called Dethrone King Dollar, said we can no longer afford to be the reserve currency because of Triffin's dilemma, and Vance said the same thing. So maybe they are trying to quietly default on the reserve status, tariff all of your allies, do all of these things that people say, what the hell?
Yeah.
And everyone starts to trade over local currency networks like we're seeing in the global south, across SIPs, cross interbank payment system, or mBridge, which is not compatible with SWIFT and the dollar. So they trade themselves, and what are they all doing? Settling imbalances in gold. And that's why you see this massive expansion of the Shanghai Metals Exchange in their vaults. The first one was completed in Hong Kong. What's the significance of that? Because if gold leaves China, it has to leave through Hong Kong. So right now, the yuan, digital yuan, is immediately convertible into gold. Right now,
That's
not
huge.
going into dollars first.
Right.
So
That's huge.
if you realize they signed up all of the countries in Southeast Asia to SIPs, the Asian countries as they're called, they have 800 million people. They're twice the population of the US and China's largest trading partner by far. They're trading over SIPs, not using SWIFT, not using dollars, and settling imbalances in gold and taking possession of that gold through the vault in Hong Kong. The second vault is under construction in Saudi Arabia right now, and they're going to build them all through the Belt Road. So instead of trading in dollars over SWIFT, they trade over local systems that are not compatible with the dollar, strengthening their own ecosystems. And instead of using treasuries, which they would use with the surplus in dollars, they don't need as many dollars anymore. They don't need as many treasuries anymore. They'll use gold to settle imbalances in currency or trade. These things are happening. So one way or the other, change is coming. And I think the moral of the story is you save in dollars, you're dead. And silver and gold are wealth. They're not ways to get wealthy. Of course, you will if you own enough, but that's not what you should hold them
That's
for.
not
You
the
hold
point.
them, to give to your daughter, those coins over your shoulder, to give to your daughter someday. They'll be money long after the dollar bills in your wallet are hanging from a frame in the Smithsonian as an example of what used to be. So anyways,
like
let's
that.
go ahead. Whatever questions you got, man. I'm sorry, I'm just
Yeah.
rambling because we
That
haven't
was
talked in a
really.
while.
No, yeah, dude, I'm gonna be able to clip this this interview in like a million different parts. There's so much you're saying that honestly you probably need to rewatch more than a couple of times just to grasp all of it. But so what are your thoughts on the Iran war? And I say that because I specifically remember a couple of years ago you were very worried about us going to war with Iran. I remember specifically you were talking about Iran. So now that it's here, what are your thoughts?
Well, I always felt that way because, look, we went into Iraq for false pretenses. We're still there 22 years later, destroying their country, never found the weapons we were looking for. And to me, it was always to be right there, keep an eye on Iran. And look, I don't think it's good. Any way you look at it, I think it's actually pretty bad because, look at the two options, and I think the biggest mistake people are making would be to think that, things will ultimately go back to normal and everything, prices will stabilize. So on one hand, if we, if we say, let's just say that we continue to this deal and we go to war with them worse than we already are and start blowing up their infrastructure and this and that, you're looking at energy prices that'll go through the roof because all of the energy infrastructure is all messed up. And if we back away and just leave, Iran will more or less signal a victory. You're looking at the end of the dollar hegemony where much of the world will move away faster than they already have from the dollar because Iran won through the way that they are doing things. They won. The U.S. came in, thought they were going to win. They didn't. They pulled out, and now all of a sudden you're going to start to see why do we want to even price everything in dollars and be part of this? So if we have to go there and blow things up and occupy and do all these things, at what cost? What's the
Right.
cost of all of this in terms of actual costs and inflation? And higher inflation is something that, it's kind of the Fed's nightmare right now because they cannot cut without, reigniting more inflation, and they cannot hike without literally smashing the country and the economy into pieces. You have $10 trillion in bonds that need to be refinanced this year. And I think Iran is exposing how fragile this entire system is because when war spreads and leverage breaks and margin calls hit, when this happens, people start to sell. And I don't know, at the same time, the dollar is getting this temporary bounce and people are, I think, not really thinking this through the entire way because I don't see an easy way out of this. If we walk away without really changing the regime, Iran wins and the dollar gets hammered because everyone starts to move away from the West and their hegemony. And if we have to go there and occupy, I remember President Bush said it would be like $500 billion, I think was the number for Iraq. It ended up being over $5 trillion.
Yeah.
So the
Pete
cost,
Hegseth Pete Hegseth just asked for 200 billion more
right? And
for the war.
it's at a cost
Just like
of
nothing, just give us
it's
we
at
need.
yeah, they're already spending $1 billion a day if we believe their numbers. And so I was looking. Let me see if I can find this here. Yeah, so if the U.S. I wrote this down. I was making some notes to myself. So if the Strait stays under Iranian leverage, it would be a historic victory, and Gulf allies shift allegiances. If not, you can continue to see military strikes on the infrastructure. You get this a massive supply shock and massive inflation. So, what is the path? You can't back away. You're already too far in.
Yeah.
And you look at a lot of these, the liquid natural gas and the helium that these plants are being hit. It's going to screw everything up. It screws up the ability to make AI chips. It's the liquid natural gas is a major component in fertilizer, so you run into famine issues. This is something where the unintended consequences will spiral out of control. And I don't know what the end game is, but I think that there really isn't an easy answer.
Yeah.
You stay
And it's
longer,
getting
energy
worse.
infrastructure gets worse.
Like they have these missiles that go twice as far, so now they can reach, they can reach. I think they just bombed what country is that? I saw that a couple days ago. It was somewhere that they didn't think it would reach, but now Trump comes out and says, they realize that they now have these, like they call them, like long range missiles that can go twice the distance as they originally were thinking. Let me find that real quick.
Yeah, and I just look, if you withdraw right now, you just create a vacuum of countries that leave the alliance with the dollar and the United States. And if you escalate, the energy infrastructure is going to crumble or be disabled for a long time. The price of gasoline and oil and all of the cumulative things. Look, oil is the foundation of everything in your room behind you. Everything you're wearing or touching or looking at or talking through touched oil, either through manufacturing or distribution. And so there is no easy path here. You're already at $5 a gallon gasoline in Washington, in Hawaii and California and Washington State. Mid fours here in Florida. You're back to the Biden era gasoline numbers. And this is not good when you start to see inflation flying. And what that means is you have to see rates go up. Well, what's the 10-year Treasury at? It's gone up 40 plus basis points in just a little bit of time. It's at 4.5. And so, you're getting to that point where we have $10 trillion in bonds that have to refinance, and the rates are going this high. And what happens to the economy? So, what that tells you, in years past, Jay, when this stuff happened, people would flood to the dollar and buy treasuries because of safety, which would lower rates. But now people around the world are selling treasuries. And the dollar, the treasuries are going up. Why is the dollar going up? The dollar is going up for several reasons. One, because everyone has to liquidate, for margin and whatever, and that creates demand for dollars. And you have a lot, energy, for example, is measured in dollars. So people need to sell their currencies right now to buy dollars, to buy energy. As it goes higher, putting greater strain in a higher dollar and higher energy costs to the globe. This is a bad, bad thing. And as far as I am concerned, you're going to see much, much, much higher inflation. And inflation is coming, and the Fed cannot lower rates. That's why they didn't. In fact, they should, which would create maybe a fix to all the imbalances in asset prices that have been distorted because of suppressed interest rates. But this is not a good thing, and it's only going to get worse.
Yeah. And remember though, if the dollar, if the dollar fails, then what happens to gold and silver? That's. But they're saying, yeah, these missiles can fire like 3,500 to 4,000 kilometers, attacking the UK military base.
Yeah, well, and that's just it. Look,
They weren't expecting that.
this is the greatest supply disruption in history for oil.
Yeah.
And Higher oil means higher inflation, which means higher interest rates, and neither one is good for a country that is indebted as ours is. Bad, bad, bad. And, it's not a good thing. It really isn't. And I don't see an easy way out of it. I don't. And the Fed is trapped. They really are. They can't raise, they can't lower, or both are bad. One's worse than the other. Maybe that's why that person bought 11,000 December 2026 bull spreads between $15,000 and $20,000. Maybe they see something. I don't know, man. It's crazy, it really is. And at the same time, you got the West selling paper, and the East is taking metal, where China brings in the largest ever inflow of silver in the history ever of these records in the month of February as the price is getting hammered. What does that tell you? Price is a tool of misdirection. Price is, the value in dollars is worth less than the real stuff in their hands. And that's the part people need to understand, that price is just throwing you off the trail.
Yeah, it really is, man. Like when I tell people to buy from Miles Franklin by sending an email to info@milesfranklin.com, letting them know Slayer sent you, I'm saying that to help you out, man. Like it's so crazy that everyone was trying to get their hands on silver when it's $121. Like if you go to the store to buy shoes, are you mad when the shoes are on sale? Like if there's a limited time offer, like no, you take advantage of that, you know? But that's people investing with their heart instead of their head. I always say invest with your head, not your heart. Take out the emotion, because that's where all the irrational decision making comes in, the impulse buying, panic selling, fear, uncertainty, doubt. That's where it all comes from. So, but yeah, is there anything else you want to touch up on before we head off?
Um, I don't know. Let's see here. What else could we chat about? Um, I don't know. I
I
guess I
mean,
would. I would
I wanted to
just.
ask.
Yeah.
I have a couple. I mean, I know you're a busy guy, but so what is like demand looking like right now? Like selling gold and silver, or like what is like? Are you having a hard time like sourcing anything or premiums or any of that? Like, what is that looking like compared to maybe like before this all this chaos?
January was the biggest month we've ever had, ever. Um, it was insanity. And of course, as the price got clobbered, there's certainly been a slowdown in the retail. People are afraid. I get it.
Yeah,
And you can only tell them so many times that fundamentally nothing's changed.
right.
And at the same time, with all of these things, debt exploding and war accelerating and escalating and all this stuff, all I can simply say is this, is that at the highest level, the biggest money in the world is standing for delivery at a level no one's ever seen before. And a lot of it being pulled off of the exchange. No one's ever seen this before. And I've used this quote a lot lately. They often ask Wayne Gretzky, how are you so good at hockey? You weren't the biggest guy, but you're better than everybody. Well, he said, I never skated to the puck. I skated to where it is going. The people who are standing for delivery are the most well-informed traders on the planet. Do you think there's any coincidence that the U.S. government classified silver critical mineral with all of these
That's
deliveries
huge.
where price is being clobbered? If price was indicative of value, why are we seeing so many deliveries, massive deliveries, and a lot of it leaving the system? Once metal leaves the
It's
Comex, it's never
gone.
coming back because it
Yeah.
would have to be reassayed. So, I don't know. I would just simply say to you that the demand at the highest level has never been stronger. The demand down here isn't as strong as it was in January, but it's still pretty strong. Because the refiners got so gummed up, the biggest, I think, the biggest victim of the refiners getting gummed up was pre-65 silver. Because if you're a big dealer like we are, we hedge everything. So we would hedge that exposure. Now the cost of margin cost went up so high that the cost became much more expensive for a company like ours. But if you are not hedging, Well, and the price falls by as much as it did, you better back your bid prices way back. But if most companies, there's 1,500 companies or more across the country, and only a handful of them hedge, I don't know how many, maybe 10% or whatever. The rest of them, a lot of these small and mid-sized companies, when they would get junk silver brought in, dimes and quarters, prior to 65, they would take that and send it to a refiner, because they can't just let stuff sit on their shelves if they're not hedging.
Is
And
that
no one,
illegal?
huh?
Isn't that
Yeah.
illegal?
No, it's not illegal because, no, it's not. They would melt it down. It's not illegal.
Yeah.
And
Huh.
so that money that would get melted down, that junk silver that would get melted down, at least I don't believe it's illegal because a lot of it goes there.
Yeah.
They can't do that anymore when the refiners got all gummed up with the margin increases and stopped taking business. So the big houses were bidding way below spot on that stuff. I bought as much as I could and I hedge it. We're selling it right now at $1.50 back a spot. I've never
That's
said that in
crazy.
35 years.
Yeah,
Ever.
that's crazy.
Never. So premiums on some stuff have come way down.
Yeah.
I don't know. There's decent availability right now. And I think this is the time to be buying, to your
Yeah.
point, because a few weeks ago it was $120 an ounce and it's gotten clobbered.
Yeah.
But remember, when you see the deliveries coming off Comex this way, when you see the biggest, most well-informed money on the planet standing for delivery, it tells you that, physical is tighter than the screen price suggests. I'll put it to you that way. And there's a disconnect. Paper says one thing, physical says another. And when real bars are leaving Western vaults for higher bids, like going to China or just leaving elsewhere, the market is telling you that the paper price is wrong. And I believe that to be true. I guess we'll see how it all plays out. But, this morning, in the middle of the night last night, silver was down $4.50 or so. Now it's up 2 plus.
Yeah, that's crazy.
So maybe it's reversing. Maybe that was the bottom flush out. I guess we'll see. But look, if you can tell me what's changed, what's gotten better since the war started, I may listen. As far as I'm concerned, the fundamentals haven't changed one bit. If anything, they've gotten stronger.
Yeah. All right, man. Well, I appreciate your time. Hopefully we can do this every week.
I would love to do it every week,
Yeah.
right this
Yeah.
time every week, and I think
That's
we ought
fine.
to. It's been too long, and I'm so glad
Yeah.
to see you back. You look great, and
Yeah, thank you.
let's do it, man.
Yeah.
Let's do it.
Yeah, for sure. I appreciate all you folks for tuning in as well. Remember, if you want to purchase from Andy, send an email to info@milesfranklin.com. Let him know Slayer sent you. We have a weekly price sheet, specials every week. Highlighted in green at the top are this week's specials, several different ways to pay. It's a great way to get plugged in with the direct source, not at the mercy of these websites that after, everything's out of stock anyways over there. So yeah, info@milesfranklin.com. Let them know Slayer sent you. This is Silver Slayer. See you guys tomorrow.
Hey, by the
Peace.
way, real quick, before you
Oh,
hang
yeah.
up,
Yeah.
I don't know if you're busy tonight, but I'll be doing a live stream tonight.
Okay.
I'd love to have you on if you want to jump
Yeah.
on and say hello.
Yeah.
I'll send you a link, and if you can jump on, let me know, and let
Cool,
my
yeah.
audience get to chat with you also.
Yeah, that'll be awesome. Okay, cool.
You have a
Yeah.
good night. You have a good day,
Yeah.
my friend. We'll talk to you soon.
All right. See ya.
Bye-bye.
If everyone in the world tried to buy just 1 ounce of silver, there wouldn't be enough to go around. And as the dollar keeps losing purchasing power, more people are rushing towards precious metals. Supply is tightening, inventory is crumbling, and premiums are rising. You don't want to rely on websites that are constantly out of stock. You need a direct source. And that is exactly what I can offer you. I'm connected with Andy Schectman, which is the CEO of Miles Franklin, one of the most respected precious metals dealers in the United States. Having a direct line like this is something most people don't get. So if you're serious about silver stacking, send an email to info@milesfranklin.com. Let them know Slayer sent you. You're directly plugged into a precious metals dealer, because soon enough, most people won't be able to get their hands on silver, and I don't want that to be you. So once again, send an email to info@milesfranklin.com. Let them know Slayer sent you. Everyone loves free stuff, especially free silver. Well, imagine how exciting, how cool it would be if at the end of every single month, on the 31st specifically, you are automatically entered in a silver giveaway every single month. So you always have something to look forwards to. Well, over at the Secret Silver Society, that is exactly what I do. On the 31st of every single month, I do a silver giveaway, and I give away some silver to the members. I do a spin the wheel. I put everyone's name in the wheel, and whoever wins that month wins some silver. It's a really cool opportunity. We have a live chat room. I post videos on there, can live stream on there. You can DM me directly. Plus, you always